Welcome back. Part 1 taught you the page and the 2 common cards. This one covers the rarer signals, the 8 pages behind the feed, and alerts on your phone. Same routine as before, the words first, so nothing trips you later. 2 new signal types today. An open interest spike, positioning jumped, contracts opened or closed in size on one strike. And an implied volatility spike, the price of risk jumped. Both fire on a threshold crossing, not on trades, so neither card has a tape, and each says so plainly. Implied volatility, 4, is a movement the market expects, priced into the option itself. More expected movement, costlier options. 4 rises before results, news, and expiry drama, which is exactly why a sudden jump is worth flagging. A whale or a campaign, the same contract hit again and again in one session. One big trade can be a hedge. 8 returns to the same strike is somebody building a position. There's a whole page for these. And OI walls. Heavy call open interest above the price, sellers defend it, and it acts as resistance. Heavy put open interest below, writers defend it, support. Standing positions become the levels everyone watches. The heat map page draws them strike by strike. Now the signals properly. First, the open interest spike. A sweep fires on trades. This fires on positioning, open interest jumps sharply, with no single dramatic print to point at. No burst to replay means no tape, and instead of hiding that, the card says it plainly. And read the value carefully. It's the open interest change price at the option, not money that traded in one print. It would be easy to show a big rupee number and let you assume it was a single trade. It wasn't, so the card says so. A real one. 9:21 in the morning, Nifty 24,500 puts, nearly 11,000 contracts of fresh open interest, worth about 12.5 crores at the option price. Puts being written at the open, and you know the grid, but writing is bullish. Score 93. Second example, other direction. Sensex 77,800 puts, 4,000 fresh contracts, and this time the read is bearish, with every box ticked, 100 out of 100. Same signal, opposite side. Notice both cards, no tape, and both say why. Next, the volatility spike. When implied volatility jumps sharply on one strike, somebody is paying up for movement they expect. Often ahead of results, or news, or an expiry squeeze. These are the rarest cards here, a handful a day at most. And we are strict. If the volatility number isn't reliably measured, the card doesn't show at all. A wrong volatility reading is worse than no reading. A real afternoon, July 15th, 1 o'clock. Nifty 24,200 puts, implied volatility jumps from under 15% to over 19%, and look at the card being honest with you. Open interest fell, position holders used the spike to get out. The card shows both sides and doesn't pretend to know more. 8 minutes later, the same strike. 19 to 26%, and this time the card reads short covering, with volatility moving with the print, real urgency behind it. Shorts buying back while the price of risk rips is fear you can measure. 2 cards, minutes apart, the read is never just the number. It's where the market's attention snapped to. Now the pages behind the feed, 8 of them. The whale tracker for campaigns. The heat map for the walls. The screener to rank the day, and stock positioning for the multi-day trend. Then market pulse, whale OI positioning, top volume, and the block deal feed. A quick tour of each, the feed is the door, these are the rooms. Whale tracker. Same contract, hit again and again in one session. The page finds those campaigns and shows the total, the average price, and how long the build took. Look at this one from Friday. The same Nifty strike hit 27 times, over 200 crores of total notional, built across 6 hours. That is not a hedge. That is a campaign, and it would be almost invisible in a plain trade feed. The open interest heat map, the walls from the whiteboard, drawn strike by strike. Green bars are called open interest, red are puts, and the dashed line is the spot price. Where a bar towers over its neighbors, that's a level big money is defending. The screener, for when you want to go looking rather than wait. Every name ranked by institutional flow activity, with aggressor bias, net flow in rupees, and a bias verdict, all sortable. Friday's board, gains at 99, nearly 46 crores of flow in one session. One glance tells you where the day's institutional attention went, before you read a single card. A practical routine that works. Filter the day to 1 crore and above, confirmed open interest only, then read the 2 or 3 names the screener puts on top. 10 minutes, and you know exactly where the big money spent its day. And stock positioning, the multi-day trend, name by name. Not one day's flow, whether the last several sessions agreed, and whether price moved with them. And when price disagrees with the flow, the card says so. Here, Gale reads bullishly on flow while price is down over the window, and the card shows the disagreement instead of hiding it. Trend read, not a prediction, the page's own words. Market pulls, the whole day in one read. The regime gateways confirmed bullish flow against bearish, Friday closed bullish, 63% confidence. And below it, call versus put open interest for every index, the PCR lesson from part 1, live. Whale OI positioning, the walls, drawn live. Green put wall stack under the spot, support that big money defends. Red call walls above, resistance. 2 marked levels to know. Max pain, the price where option buyers as a group would lose the most, and price often drifts toward it into expiry. And the flip level, where hedging flows switch from calming the market to pushing it. All rendered from real positions, every day. Top volume by strike, every tracked stock's hottest call and hottest put strike today, with a flame when that strike just hit a fresh 10-day volume high. The fastest way to see where each stock's battle is actually being fought. And the block and bulk deal feed, the cash market side, with actual fund names. A 374 crore block in one window is conviction you can read by name. Options flow shows you the bet. Block deals show you who is moving size. You don't have to sit on the page. Telegram alerts push the big prints to your phone the moment they fire, the same ones you'd see here, with the same evidence attached. And a morning recap by email, summarizing what happened the session before. Both are free to switch on from the account menu. Now the part most sites skip. What this does not do. It does not predict. Nothing here is a forecast, and no score is a probability of profit. It measures how well evidenced the trade was at the moment it printed. It does not tell you what to buy. We show what large traders did. Position sizing, risk, and whether it suits you at all, that's yours. And it does not see everything. We cover the most liquid names and every index. Deep out of the mini strikes on thin stocks will always be sparse, because there simply isn't enough flow to be sure about. One honest note about the numbers. A volume multiple of 999 times average often means the strike barely trades at all, not that something enormous happened. Read size in rupees first. Multiple second. Quick revision of today's words. An OI spike, positioning jumped, no tape, and the card says so. And 4 spike, the price of risk jumped. A whale, the same strike hit again and again. And OI walls, standing positions that become the levels everyone watches. If any of these feels fuzzy, the tour is 2 minutes back. That's the whole product. The feed and its cards from part 1. The spike signals, the 8 pages, and alerts on your phone from today. And the honest list of what none of it does. Start free. 5 alerts without signing up at all, and the full feed once you do. If it's useful, it's $12.99 a month, and you can cancel from the account menu in 2 clicks. If you haven't watched part 1, that's where the reading method lives, the link is below. Take one alert tomorrow, open the tape, and check our read against the raw prints. That's the fastest way to decide whether this is worth anything to you. Thank you for watching, genuinely. If anything is unclear, drop a comment, we answer everyone. And if this helped you, share it with your trader friends. Better reading makes better trading. See you on the flow page.